Hello and welcome. My name is Evgeny Rusakov and you're watching TVP World, interview from Vilnius. On the 2nd of April, Donald Trump signed an executive order on mirror duties against dozens of countries. In less than a week, the US president's decision crashed stock exchanges in the United States and Asian countries, accelerated the decline in oil and other asset prices and led to an escalation of the trade confrontation with China and the EU. To discuss all this, we are joined today by the economist and member of Lithuanian Parliament, Jekaterina Rojaka. Jekaterina, thank you for joining us today.
Thank you for having me today.
First of all, what's your, as an economist's, view on everything that is happening right now with global economy, trade markets and all that stuff?
Yeah, as an economist, I spent quite a lot of years also lecturing economy in the university, so you can throw all the textbooks away. That is what is happening currently. So, and what is happening now is more orientated on the game theory rather than economic textbooks, because...
So is this more of a gamble?
Absolutely. Well, two cars rushing each to another, looking for which one will fare out, and this is called the chicken game. And we see that there also the Trump position is also like we're going three steps in further and then 2 steps aside somewhere on the left, on the
not even
right
back, but aside. Okay, so again, as an economist, can you tell me where are we at this specific moment?
We're pretty much in the middle of chaos. So if you take a look on the uncertainty index all over, global uncertainty index, we're pretty much at the peak where we have been only during the beginning of the COVID. So now again, the businesses, the markets, the stock markets, they're waiting for any kind of news. And those news are set at pretty much every night. So in the morning or during the night, you can take a look and you say, okay, these have changed. And of course, you're waiting for the stock markets to react. So definitely the uncertainty is the rightest word to define where we're standing. People are changing the currencies because of the drop of United States dollar. Well, people are taking advantage of buying some goods in advance because they're having very realistic fears that the price will go up, and nobody can explain how much because the rate of the tariffs are changing pretty much like every single week.
I wouldn't like to predict, but I think that this should be happening for at least less than 4 years now, until Trump is on his post in White House.
But we're pretty much standing in the very beginning of this circle, and this beginning of the circle was very much worrisome. So it was very productive. I would say anti-productive for the economy.
Okay, yeah.
So we're looking for the changes that might really change the world. But again, to change the world, we need more than just Trump tariffs. We need also the reaction of the other countries, and the reaction is harsh. So there is also not only the economic point of view, but also the geopolitical point of view.
Collapse in US stock changes that happened recently. What do you think about this as an economist?
Well,
was this expected, first of all?
Definitely, it was expected. But the size of the collapse was difficult to predict. Well,
okay, if it was expected, were we ready for that then?
You can't be ready actually for the stock exchange for the stock exchange changes, because it's very much harmonized with who announced what. And Donald Trump announced that kind of move, hike of the tariffs for all over the world, except for, I believe, Israel, because they stepped down and they didn't put...
Well, India as well.
India also, they moved to the... But India was imposed a 10% tax, like the lowest possible. But nonetheless, well, the reaction of the stock exchange was very much predictable. The scale, again, many economists mentioned that we were expecting for the Black Monday, so hopefully it wasn't the Black Monday that was previously, when when the stock
100 years
collapses.
ago.
Yeah, it collapses like 22% per one day. It was 2 times less, roughly about 7-8%, but it was still quite harsh because stock exchanges were forced to close even earlier. So, but again, this fluctuation, what we should expect, that this fluctuation will be appearing here and there, depending again on the decision that will be made.
Okay, so Jekaterina, you said that this wasn't truly a Black Monday that, well, we had 100 years ago. But okay, was it all for the sake of sanctions against, I don't know, China, Russia, whoever else? And how seriously should we assess this Trump's and his administration moves?
Well, it's mostly because of their unpredictability, and well, if the economy is going into the unpredictable way, so the more and the more harsher effect on their stock exchange you could expect. So this was most probably not 100% linked with the Trump's tariffs, but 95% for sure. So it was quite a lot of stemming specifically from the Trump tariffs. And you can also see that when the stock market has rebounded after 90 days pause was announced again. So, but this fluctuation is, I wouldn't say it's a normal thing, but this fluctuation...
It's not good for the economy,
It's definitely not good for the economy. But it could make some people richer, and we know
I guess it did.
It definitely did, and there was a lot of escalation that's not less to the administration of the Trump and to their first round of the friends, and also, unfortunately, that could make more people less rich, and that also have happened. Well, the stock exchange, the stock exchange and investments are keeping up all over globally, and not only in the United States, but also in Europe and the Baltic countries. The more people investing into their future, into their pension through the markets, and this, of course, could put quite a lot of problems on their long term.
What can you say about China's reaction?
Well, China's reaction is very pragmatic. They calculated what would be the most problematic areas for the United States. But even that, it's not only about the specific goods. But if we take a look on the structure of the economy, well, roughly about 90% of all everyday technical assistance is coming from the goods from China. About 60% of all their smartphones. Even more. If we talk about Apple, it comes like 80%. 3/4 of all the toys market, so children dedicated market, which is also huge for the economy. And consumers in the United States. So there is a huge range of the goods that, because of the tariff hikes, would be less affordable for the United States. And of course, it's not only about the China response, but the other countries also have responded immediately. And while it was put on the pause, the reaction was also put on the pause, but nonetheless, it's in the pocket. It's lying on the table, and when it will switch on, so the response will switch on, and then we will be going through this inflationary spiral further and further.
Well, looks like we have a long way to go, I guess, right?
I hope not so long, yeah, okay. Because definitely what we've seen, there is a step back a little bit on the tariff, and we now know that this night it was announced that the technological goods such as smartphones or laptops will be exempt to the tariffs from China, and it mostly again dedicated to the tech grants or such as Microsoft and especially Apple.
Okay.
So we see that the trade is going on.
Brilliant. Okay. Again, coming back to China and other countries that you've mentioned, here's the question that I would like to ask. How would you assess China's proposal for the EU to unite powers against Trump's tariffs. Is it a good move? And how do you think will the European Union behave in this situation?
Well, again, China is very pragmatic. It's a huge economy with very pragmatic aims, and they see that there's a possibility for the China market to expose their goods for European Union. Again, if it happens for European Union, it will be quite beneficial because it will put a downward pressure on the prices. So we will keep inflation under more control. And on the other hand, from the geopolitical situation, it might be quite problematic because, the stance of European Union is still to have United States as a strategic partner.
Main strategic partner.
One of the key strategic partners, yeah, especially on the defense side. The neutrality of China is kind of under the question, especially when we know the casualties from Ukraine.
Yeah.
So I believe that the political side of the story will be quite different from the economical calculations. So in that, but I believe that more and more the countries will be trying to find this economic background and the weight and the decisions will be made calculating both the geopolitical story and also the economic problem.
There's another one question that I would like to ask you about China and US. So if we are on the brink of trade war between China and the United States, what should ordinary people and businesses do in this situation? I mean, that's the simple question, which is probably in most of the people's heads.
True, and if we think about the trade war just between the United States and China, it's one story. But if we're talking about the trade wars,
about our region here,
but trade wars that we will be involved quite directly. So with all the escalations of the tariffs on Europe and backwards, so it's a different story. But in any case, when we talk about businesses, first of all, it should be diversification of markets. The companies that were solely focusing on the United States or on China, well, they will be definitely having problems. So that's why it is very important to start looking for any other alternatives and possibilities here. Secondly, hedging against the currency fluctuations. Well, we've seen that would happen into the USD. There might be also different responses. So this is for the businesses. For the people, well, be informed, definitely. It would be quite difficult to withstand global collapse, and the looming talks about the global recession that again might happen if the trade war will intensify and will go deeper and further in their different regions. And in that sense, well, just be cautious. I believe that for currently there is no need to go into the panic, but being cautious about the consumption, about investments, specifically about investing on the markets. Don't try to look on the very end of the deep dive in stocks, because it might happen again and again, and most probably the fluctuation will be was holding for several years.
Well, that's a good advice. Okay, thank you for this advice, and I really appreciate you saying that. Jekaterina, thank you for joining us today. Thank you. I really appreciate you coming to our studio, and I really hope to see you one more time.
Thank you. It was a pleasure.
Thank you. And I would like to remind our viewers that our guest for today was an economist and member of Lithuanian Parliament, Jekaterina Rojaka. You're watching TVP World. Stay with us.